Let's take a look at your market news now. Asian stocks rebounded on Friday despite the introduction of U.S. tariffs on $34 billion worth of Chinese goods in what Beijing called the largest trade war in economic history. Beijing said it had already imposed retaliatory measures on U.S. goods without immediately providing precise details. But analysts said the news had been expected for weeks, and therefore many traders took the opportunity to buy into markets that have been under pressure over growing global trade spats. Hong Kong's Hang Seng Index gained 0.5%, while the Nikkei took up 1.1% of gain. Shanghai's Composite Index was also a firm riser, moving up 0.5%. Wall Street's major indexes rose on Thursday as reports that the United States and the European Union may agree to withdraw auto tariffs fostered optimism on international trade relations among investors. The US also slapped a raft of tariffs on Chinese goods in an escalating trade war between the world's two biggest economies. The Dow Jones Industrial Average rose 0.75%. The S&P 500 gained 0.87%, and the Nasdaq Composite Index added 1.12%. Now, for more on the markets, we're going to cross to Arabile Gomede, who's at the Johannesburg Stock Exchange. Arabile, what are the markets reacting like to this trade war at this point?
Yeah, well, reaction to that trade war, Nzinga, is going to continue, and it's festering really to fever pitch, really. And I think it's going to be a lot of he said, she said, he does, we do as well, coming out of the US and China as well. Just speaking about exactly what has happened as well, the EU Commissioner really has come out really in word of the deal and saying that it's really not easy to be winning trade wars, and is really, really worried about how this is going. Cecilia Malmström, who is the EU Trade Commissioner, saying that, of course, it is worrying how this has escalated to where it is really, and tariff hikes like this could certainly be damaging for the EU economy and across the globe as well. Just how that festered into the European and local markets, let's take a look. Yeah, well, market movement has been clearly in the red there for some parts of South Africa. 0.6% lower for the JSE. I'm joined here by Warwick Lucas from Galileo Capital. Warwick, thank you so much for the time. That red movement, certainly a bit of a surprise considering yesterday the US was in the green. Europe is also in the green today as well.
Yeah, I guess it still filters through to emerging markets, of which South Africa is very firmly in that camp. I mean, yeah, bear in mind that the likes of a stronger dollar to emerging markets is in fact a kind of a equivalent of an interest rate tightening, almost a, yeah, it's like a kind of a quantitative tightening because of the amount of debt that is denominated in dollars. Yeah. So yeah, and obviously, I mean, the trade war talk is of a concern. But China's description of it as the biggest trade war ever, well, I suppose if one didn't do inflation calculations, yes, that would be true. I don't think it's comparable yet to the 1930s, because that really was a completely global war. Every country did the same thing, whereas I think it's very much a unilateral type of, or at most bilateral type of war that we're looking at here. And I think strategically, the US is in a much better position. So, you know, first of all, it's their import market and everyone else's problem, particularly China. So they've got a much bigger stick to wield. And the second point is that, courtesy of the tax cuts, we've now got the situation the US is fiscally stimulated to a point that the economy's warming up, and if anything, we've got the Fed already talking about rate hikes and so on. Which means that should China retaliate, and frankly it's not in their interest to do so, but if they did retaliate, the US is in a position that, well, it's already got slack there, it can actually afford to take a hit, whereas China not so much.
Is there, however, a chance that this could filter through into the rest of the world and really hurt a lot more people than just the US and China.
I think it's definitely can be knock-ons, whether it comes through in a monetary way and that demand is crimped and production also suffers. You know that so you can have effectively some kind of inflationary consequence, or you can have a growth consequence, or both. Yeah. Are there potential knock-ons? Yes, and the market is right to be twitchy about it. But I certainly don't think we're looking at an Armageddon scenario at this stage.
There is a story as well just about a ship that was on its way from China to the United States, actually, that's being reported, and just didn't make the cutoff. So the question becomes, what exactly happens to that? Does it end up having been, does the China pay more tariffs with regards to that? Or does it, go back home really and does a U-turn? So it's going to be interesting how this trade war continues. But in equity news, Glencore, they've had a torrid week really. It's been up and down for the large part. They get subpoenaed by the United States, and then they have a share buyback of around $1 billion US dollars as well. How do we view Glencore in this time?
Okay, so it's sort of quite a messy news flow. Yeah. I mean, one could argue that to some degree they are makers of their own problems, but on the other hand, when you're involved in those kind of rough jurisdictions, well, that is par for the course. But then again, as one takes a dim view of that kind of behaviour, so it's not considered acceptable anymore. Yeah. So I guess from the point of view of shareholders, Glencore is signalling, well, looking beyond all the troubles that we got ourselves into in the Congo, there's still value in the business. Whether that's actually true or not, well, we don't know, but we suppose that they are trying to act in the best interests of shareholders and signal where it's at.
Yeah. At the same time, Dangote Group, the big cement maker, considering going into the London Stock Exchange, that should be big.
Massive company, and it's really outgrown the Nigerian equity market, which, by the way, is still a very big market. But to go to London, I think it's a kind of size where it really does need deeper pools of capital. But traditionally, your global investors into Africa outside of SA typically had a pattern of buy the brewer, buy the banks, and buy the local cement maker. And so I think Dangote, in a way, bringing themselves to the world here in quite a nice way.
Yeah, quite an interesting one, though. Is this a growth move, or is this just a move to acquire perhaps a little more funding for some expansionary moves a little bit later?
I think a bit of both, and also just widens out the shareholding. I mean, at some point, Dangote would want to monetize himself. I mean, I guess it's going to be a dynastic kind of business in a way, but to be able to handle that size of shareholding, well, you would be looking at a bigger market.
Yeah. Let's head into the oil market then as well. A few jitters here and there, around $76 a barrel. If we take a look up here, it's at $76.74 a barrel. Should we be worried? The US-China tariff issue, will that play a part in just where the oil price go, or is it purely just Saudi Arabia?
Okay, so it might. I mean, when he's not shouting at China, Trump has a go at Saudi. Yeah. Okay, so the effect of a first round of tariffs on China would be about 0.2% or so of China GDP. Sure. So it's a knock, but on a big one, and therefore I don't think a big enough one to really knock the fuel market per se. So at this stage, I mean, we're not really seeing a follow through, and we haven't really seen cleanly just how the OPEC countries' changes in production are really going to follow through. So at this stage, it's more about inventory effects. I mean, we saw the US actually building some inventory there, which I think was considered a bit of a surprise in the last month or so.
Fantastic. Warwick Lucas from Galileo Capital. Thank you so much. $6,518 is how much one Bitcoin will set you apart with, and 92,000 Rand as well for the same Bitcoin. That's a look at the market. It is relatively red today. African Rainbow Minerals sitting in the green, nearly 2% there, as well as Anheuser-Busch InBev and Anglo Platinum as well sitting pretty today.